Joining us now, talk markets, the declines we've seen lately as Julie Biel, portfolio manager, senior research analyst at Kayne Anderson Rudnick. She's also a CNBC contributor. Good morning to you. It's been tough out there, and we got a little bit of green this morning, but I don't know between where the Fed may be going and just about everything else. Are you in the buy category, or would you be holding your powder? What would you be doing? Or in the bond business, like Kelly Evans?
You know, we live in the hold at Kayne, right? Our average hold period is 5 years, and I make maybe 1 or 2 trades a quarter. So, you know, for the most part, our positioning is always the same because we really pretty deeply believe it's hard to predict what's going on. We were all wrong, right, about this recession that never showed up. So I think that taught us that it doesn't really pay to be defensive or value or growth. It's really better to just own very good quality businesses that can do well regardless of the economic conditions. It's just
do you have a take on what the Fed's going to do at this point?
I think it's important to kind of bear in mind how, higher interest rates really filter through the economy. It's important because you need to be thoughtful in terms of, are your stocks that you own overvalued relative to where interest rates are, right? And it's interesting to me how strong the economy, the stock market has been, despite having very attractive yields for investors. And I think people are there's a lot of FOMO and a lot of people feeling forced that they have to participate in this market, but there's not a lot of conviction. You look at earnings and any company that even was so, the stock sells off immediately. And so people are really nervous about any kind of cracks.
What do you think of Walmart's earnings? I mean, and we keep talking about Walmart versus Target, operationally in the mix at a Walmart versus sort of where we are across the board in terms of the economy?
Yeah, I mean, I think a lot, if you look at anything in retail, before, coming out of the pandemic, any retailer did well because we were just so desperate to spend money. And now people are really just kind of choosy about where they're going to spend their money because inflation has taken a lot of wind out of their sails. I think it's a function of the level of execution. So you see stores in the same categories, Dollar Tree, Dollar General, and they have complete divergence in how things are going in terms of their traffic. And it's just a function of how well you're executing to bring your consumer into the store. And it's, kind of as you guys were talking about, Walmart is just executing extremely well, both in the store and online, and Target just isn't.